Could silver really hit $300 by summer 2026? Today, we peel back the curtain on the financial forces that could ignite the greatest wealth transfer in history. Before we dive into the data, make sure to subscribe, hit that like button, and share this video with anyone who values financial freedom. It helps us bring you more in-depth analysis. The projection of $300 silver isn't just a number pulled from thin air, it's a mathematical inevitability based on current monetary expansion. When you combine this with the structural supply deficits we are seeing in the physical market, the pressure becomes unsustainable for the shorts. For the last decade, we've seen a persistent gap between mine production and global demand. We are currently facing a deficit of over 200 million ounces annually. This isn't just a temporary blip, it's a structural failure. Mining companies have underinvested in exploration for years, and the national champions of the past are struggling. Project Vault data suggests that even secondary supply from recycling is hitting a wall. We are entering a phase of physical scarcity that the paper markets haven't even begun to price in. The math is simple. When demand for industrial utility meets a vanishing supply, the price discovery phase will be violent. This is the foundation of the moonshot. Silver is the most conductive metal on Earth. It is indispensable for the green energy transition. Every solar panel, every electric vehicle, and every 5G tower requires silver. Unlike gold, which is mostly stored in vaults, silver is consumed and lost in industrial processes as governments push for Project Vault initiatives to secure their strategic interests. The competition for remaining physical silver will intensify. We aren't just talking about investment demand, we are talking about institutional necessity. If a national champion in the tech sector needs silver to survive, they will pay any price to secure it. This floor is what prevents a significant pullback. The registered stocks at the COMEX and the LBMA are reaching decade lows. We've watched millions of ounces leave these vaults every month into private hands. This Project Vault movement is the silent killer of the shorts. When the paper to silver ratio reaches its breaking point, the exchange will be forced into a cash settlement, or a massive upward price adjustment to attract new metal. We are approaching that threshold by summer 2026. The geopolitical implications are even more profound. Project Vault is a coordinated effort by sovereign entities to secure physical silver before the paper market collapse. By removing millions of ounces, they are creating a liquidity trap. We are seeing the rise of national champions, state-backed entities aggressively acquiring silver mining assets. In a post-2026 order, physical commodities are the only true collateral. When a country designates silver as a strategic asset, the free flow of metal stops. This balkanization is the primary driver behind our $300 target. The math is undeniable. If you're finding this analysis critical for your strategy, please hit the like button now. Share this video to spread the word about the 2026 silver roadmap. And if you haven't subscribed yet, join our community of analytical investors. Your support allows us to continue tracking high-stakes movements like Project Vault. The financial order of operations teaches us to look at total M2 money supply relative to physical silver. The nominal price must reach triple digits just to maintain purchasing power. At $300, silver is simply catching up to the reality of currency debasement. The national champions are already pricing this in. They aren't selling, they are hoarding. The window for preparation is narrowing. The Project Vault finale will trigger the $300 moonshot by summer 2026. This is the math of the new financial era. Subscribe, like, and share to stay ahead of the curve. While the physical deficit is the engine, geopolitics is the fuel. We must now look at the invisible hand of Project Vault. For years, the price of silver was dictated by paper trading on Western exchanges, but Project Vault represents a fundamental shift. Sovereign entities, particularly in the East, have begun a massive, non-reported acquisition of physical metal. They aren't buying to trade, they are buying to hold. This is about securing the essential conductivity needed for the next industrial revolution by siphoning millions of ounces directly from mines and private dealers. They are bypassing the COMEX entirely. This creates a ghost market where the real price is significantly higher than what you see on your screen. When the public finally realizes the vaults are empty, the revaluation will be instantaneous. This is the liquidity trap that leads to three-digit silver. Coinciding with this stockpiling is the emergence of national champions. These are mining companies that have essentially been nationalized or are under the direct control of sovereign wealth funds. These entities no longer prioritize shareholder dividends. They prioritize national resource security. In countries like Mexico, Peru, and across Southeast Asia, we see a growing trend of resource balkanization. Silver is being designated as a strategic asset, meaning it may soon be restricted from export. This ensures that the national champions of the tech world have the metal they need to survive. while the rest of the global market is left to fight over the scraps. This is a zero-sum game for the 2026 roadmap. This shift in global power is the most underreported story in finance. If you're finding this analysis critical, please hit the like button and share this with your network. As the silver market fragments, the traditional supply chains that Western industries rely on are breaking down. We are seeing a move away from globalized trading towards strategic bilateral agreements. A national champion in the semiconductor industry in the East may have guaranteed supply, while a competitor in the West faces indefinite delays. This isn't just a price issue, it's a survival issue. The cost of silver becomes irrelevant when you simply cannot obtain it at any price. This institutional desperation is what provides the floor for the $300 thesis. We are witnessing the end of the transparent, globalized commodity market as we know it. The 2026 revaluation is a reflection of this new reality. We still have the final math and the 2026 revaluation roadmap to cover. Make sure you're subscribed so you don't miss the conclusion. Share this to help others prepare for what's coming in 2026. Finally, we must look at institutional positioning. Smart money is already moving into physical hard assets as a hedge against the financial order of operations debasement. They see the writing on the wall. The move to silver isn't a speculative play. It's a move toward the only true collateral left in a debt-saturated world. As Project Vault reaches its conclusion by summer 2026, the scarcity will become undeniable even to the mainstream media. By then, the price will already be in the hundreds. This concludes our geopolitical analysis. Next, we will reveal the exact mathematical roadmap that leads us to the $300 target. To understand why $300 is mathematically sound, we must look at the ghosts of silver cycles past. History doesn't repeat, but it certainly rhymes. In 1980, silver famously touched $50 an ounce. When you adjust that for real M2 expansion and the financial order of operations since then, that $50 peak is equivalent to over $200 in today's liquidity. But the 1980 squeeze was driven by only two major players. Today, the demand is institutional. In 1980, the industrial floor didn't exist in the way it does now with green technology. We are currently facing the same monetary pressure as 1980. But with a physical scarcity that is 10 times more severe. The math suggests that the revaluation must exceed the 1980 peak by a significant margin. This is why the $300 target isn't an outlier, it's a regression to the mean. In 2011, we saw another run toward the $50 level following the massive quantitative easing programs. But even then, the Project Vault movement was in its infancy. Central banks were still focused on gold, and the industrial utility of silver and photovoltaics was a fraction of what it is today. In 2011, the silver to gold ratio briefly touched 30-1. If that same ratio is applied to gold's projected 2026 value, silver reaches triple digits effortlessly. The 2011 cycle proved that the market has the appetite for high-priced silver. The 2026 cycle will prove that the world has the necessity for it. We are entering the first cycle where silver is treated as a strategic sovereign asset. The past cycles were the rehearsals. The 2026 roadmap is the main event. Prepare for the revaluation of the century.